time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold. So let's get into it. Your Stock, Our Take. We got a packed show, so we might as well get into Quarterhill Inc. Symbol QTRH on the TSX. Price $1.50, down 18% on Monday this past week. Just alone, $170 million market cap. What does Quarterhill do? They operate in the Intelligent Transportation System, ITS, and in intellectual property, IP, or kind of patent troll area of its business. In ITS, its ETC and IRD subsidiaries provide tolling and commercial vehicle weigh station solutions to government agencies. In the IP segment, WiLAN is a leading patent licensing company. Why the drop? Well, Quarterhill made 3 announcements on Monday. Number 1, Brett Kidd, its CEO, is to step down effective immediately. Number 2, John Gilberry, appointed as the interim CEO. He was the chair of the board. And number 3, Quarterhill expects consolidated revenue for fiscal 2022 in the range of $303 to $307 million, consolidated adjusted EBITDA in the range of $63 to $66 million. So those are the 3 announcements. Let's examine those. If we rewind back, because we have followed this company for a number of years, not recommended now, but followed them, rewind back to December 15th, 2021, Brett Kidd, the then CEO of Quarterhill's recently acquired subsidiary Electronic Transaction Consultants, or ETC, was appointed CEO of Quarterhill. Brett was then, at that point, he was handpicked to guide Quarterhill's new focus on the exciting intelligent transportation system industry that comes directly from the company. He was selected by John Gilberry, the board, the chairman of the board, and the board itself, to replace Paul Hill, who was just appointed on May 5th of 2020, after another exhaustive search conducted by John Gilberry and the board. With that, we should end up with Quarterhill having around 4 CEOs in a range of 3 years. And for me, what is really getting exhausting is keeping up with who is in charge at Quarterhill. Thrown into this announcement on Monday was that Mr. Gilberry is expected to remain interim CEO until such time as a new CEO is appointed through the current exhaustive search, and will not stand for re-election on the board at Quarterhill's 2023 annual meeting. It appears these searches have become, I'll use that word again, exhaustive, so exhausting for John Gilberry that he is now also leaving the company. So that takes care of 2 of the 3 announcements. Finally, for fiscal year 2022, Quarterhill is reporting it sees consolidated revenues will be in the range of $303 to $307 million. Now, as I saw reported that this was well above the consensus estimates of $233 million, but that does not square with the data that I'm looking at. The one report that I do see out from a brokerage firm on the company was looking for around $310 million in revenues. As such, Quarterhill is actually is below that estimate, not well below, but below that estimate. The consolidated EBITDA, again, it said expected to be in the range of $63 to $66 million. Again, that is below the estimate in this report that I'm looking at of $70.1 million. So not besting estimates. In an additional note, the company went on to say the strategic review of WiLAN, its IP or patent troll business, is essentially this business is profitable historically, but very lumpy. But that ongoing search to basically sell this business continues, and they continue to entertain and explore options for the business and will update shareholders as they see fit. This has been ongoing for well over 15 months at this point. So let's look at the latest quarterly numbers from Quarterhill. Revenues were up 16% to $42.18 million, driven by ITS revenues, which showed strong growth, but still were below expectations from the analysts that are tracking the company. But licensing revenues were basically nil, down from $11.41 million in that quarter. Because licensing revenues are far more profitable, despite the revenue growth in the ITS segment, it has lower margins, the ITS segment at present. Quarterhill's gross profit was significantly lower year over year at $8.7 million versus 15.4 million, and the net loss was far wider at 9.7 million versus 2 million essentially in Q3 2021. So in conclusion, the balance sheet is solid, 75 million plus in cash. And in Q3, leverage was reduced significantly with a $20.8 million debt repayment. Total long-term debt was in the range of 30.2 million at the end of the quarter compared to 62.1 million at the end of September 30th, 2021. So from a valuation perspective, it may look attractive. Its EV to EBITDA is in the range of 2.75 trailing, but one must take into account that historically a great deal of profitability and contribution to EBITDA comes from the lumpy licensing business that Quarterhill is looking to sell. Now, ITS, while more consistent, ITS is more consistent, it is not nearly as profitable at present. And this multiple will likely come down when WiLAN is sold, depending on the price tag on the EV side. Now, Quarterhill is targeting 15% adjusted EBITDA margin for its ITS segment at some point in the future with no exact set timeline. If the business can get there, it will become more interesting, but it is not close to that at present, not producing significant cash flow from operations, and there continues to be instability at the helm of this firm. Near term, we monitor Quarterhill on a sum of parts basis, as WiLAN may fetch somewhat of a bounty, which could add to the cash balance for potential acquisitions. But the length of the strategic review is a bit concerning in that respect. For now, with the drama at the C-suite being far too great to stomach, we just monitor the company. Of note, on Wednesday of this week, March 22nd, 2023, Quarterhill will release its quarterly numbers for the period and 12 months ending December 31st, 2022. So stay tuned. More drama may ensue. I'm done.
Yeah.
You guys got anything on Quarterhill? We have interviewed management in the past. We just interviewed them in the past year, sat down with the new team, the relatively new team, and now we've got potentially a new team coming in. Perhaps we'll sit down with them again. But, it looks a bit directionless when you see CEOs continuing to either. And in this case, it was an abrupt departure a couple days ahead of a quarterly call. Not the greatest look for an individual who was brought in to be essentially the leader in their progression towards a more stable ITS business from the licensing business. Hasn't been able to sell that business off, if that's indeed what they're looking at, which it does look like. So they haven't executed on that transaction, and the market's just in waiting for them to come out with better margins on the ITS side of the business. So this is, a good Canadian success story when it was WiLAN as a business, generated solid cash flow that should have been able to be deployed. They've been looking at in various forms, taking that cash flow and using it to buy more stable businesses, but have really pooped the bed in that respect so far, to be honest. We benefited from one of their purchases at one point. A company that they purchased was a company that we had in coverage at the time. IRD Systems was the company. We actually cheered on the price tag that they paid for it, as we thought it was too high. So we got a significant premium. We had bought the company 2 months before. Again, they had bought at a premium of around 40 to 50%. Significant gain for us. We like that, but we thought the price was a little steep to be paying in the near term. And to be honest, based on the cash flow of that business over the past several years, it was a price that likely was too high. But anyways, we'll continue to monitor Quarterhill. But right now, again, too much drama, too much instability, charting different directions over time, and it's hard to invest in a business that again has that much instability in the C-suite.
And may I add, International Road Dynamics, there, IRD, another Saskatchewan success story.
You set him up for that one.
Yes, Ryan did.
He's been sitting there. This entire episode is a Saskatchewan. Basically, Saskatchewan loving, right?
Yeah, exactly.
You're loving it.
That's this. It's a Saskatchewan loving episode. That's what I love to hear.
The province, sponsored by the province of Saskatoon. No, Saskatchewan. The province of Saskatoon.
Wow.
That's where Brennan
I
is
might
from,
just sign off
because
the
we don't know if
podcast
it
right
exists.
now. Yeah.
Province of
Anyways, good job.
Saskatchewan.
Good job.
Sponsorship.
But I'm just reading here. The CEO is now the interim CEO as well. It's not a permanent replacement as well. So we'll probably see CEO 5 or 6 if you want to count.
Oh yeah,
him as well
he's
soon.
interim. There's another exhaustive search, and the thing that adds to the instability, he was the chairman of the board, as I understand, and he will now be leaving because he's not standing for re-election there, unless of course he becomes the new CEO, which then not interim. Maybe he won't be chairman of the board as well. But again, it's more instability. What you'd like to see is if a new management team comes in. They're not going to own the shares likely. You see this of any type of business, like you'd love to, but if they have proper incentive and they buy in with their own capital over time. But again, you just haven't seen this alignment in this business for years. It's been a headhunted CEO come in, which can work if you get the right individual. But again, they're going down the same path again. Likely the CEO comes in and tries to chart a new course. Or maybe they stay with the same course, but are they incentivized enough? Are they more incentivized to just grow the top line and not grow the bottom line? And for us, that has been the issue, a consistent bottom line cash flow per share, EPS per share, not just an adjusted EPS target of 15% sometime into the future. Like that just doesn't cut it with investors who are looking for actual cash flow and EPS. And that has been the issue here. Buy businesses that are contributing to your cash flow over the long term, if that is the strategy, or grow that ITS business organically and have some stability, obviously, in the business. And we just don't see that right now. They may get a windfall if they sell the YLAN, the patent troll, the IP area of the business off at some point over the next year. I mean, we'd expect that to be coming soon. If we do see a windfall there, perhaps they can again get an astute capital allocator to come in and allocate that capital in very profitable businesses and grow the ITS business organically. But at this stage, with the last time we interviewed management, which was about a year ago, they said you got the feeling it was relatively imminent. Nothing on that front. It's been crickets on that front. And if you're looking to sell that at some point, maybe you're not getting the exact price you have achieved, but it's a distraction for the business. You're going to focus on the ITS segment long term. At some point, you have to take the price that the market is giving you and move forward. You don't take any price, but you've been waiting 15 plus months. So let's get a price, move forward, use that capital, redeploy it in the business as you see that, as the plan has been. Now, again, a new CEO is coming in, so we'll see what the plan is going forward. We'll continue to monitor it.